Most traders fail because they try to force the market to fit their plan. You need to flip it. Let the market tell the story and then trade the chapter that's revealed. That's what I call a narrative. And when you start trading this way, trading stops being stressful guesswork and instead becomes simple execution. You turn trading into a simple reactive process where you create multiple scenarios based on the price action and then just execute whichever one the market tells you to trade. That way, all you have to do is click buy or sell dependent on what the market tells you to do, which means less time spent trading, lower stress and less chaos, and overall better trading performance. Now you've probably heard the cliche, react, don't predict. That's what this is all about. But the problem with that cliche is no one actually shows you how to do it. Well, today you're going to learn. So what is narrative? What does it really mean? How does it work? Well, narrative is simply building a story around the price action inside of a market that you're trading to create likely scenarios for the upcoming moves. We want to turn our trading into an if this, then that scenario. So rather than just forcing our analysis into a market and trying to execute based on that, we create multiple potential scenarios based on a story as to what the market could do. And then we simply wait to see what the market does because that creates our trade. So if this high breaks, then we buy. If this low breaks, then we sell. This is a very simplified version, but we're going to go deep into it in this class. Now we do this narrative creation across multiple different timeframes: the weekly, the daily, the 4-hour and below. The weekly, the daily and the 4-hour timeframe are where narrative building takes place. And look, if you're a day trader, this is just the same. It doesn't matter if you're trading the 15 and 5-minute timeframes. This weekly, daily, 4-hour flow will be massively beneficial to you, so you should do this narrative building whether you're a swing trader or a day trader. Now, once the narrative building has been done on the weekly, daily, and 4-hour, we can actually just continue to apply the same processes on the 4-hour and below, which is how it becomes relevant to day traders if that is what you do. But the 4-hour and any time frame below that is where we really start to formulate setups. We don't trade the weekly, we don't trade the daily, it takes too long. But we do use this to build our narrative, and then the 4-hour, the 1-hour, the 30-minute, the 15-minute, and anything else beneath that you want to trade is where the setup formation takes place. So what I'm going to do is take you through this flow, weekly, daily, 4-hour, and those timeframes below, and show you how you can build narratives to 10x your trading results. Let's go to it. So the narrative building process begins on the 1-week time frame. Every time. Doesn't matter what timeframes you trade, this is where we begin. The reason that we begin on the weekly is because this gives us an overall idea as to a potential trading range that we will be trading in the upcoming week. Now, because the weekly chart is obviously a very high time frame chart, movements that take place within one individual weekly candle are often hundreds of pips, which means that if we set our trades up from the weekly and build out ranges here, it pretty much will set up our trading range and the directional areas of interest and biases for the entire upcoming week. So what we want to look for initially when it comes to building a narrative is the recent leg of price action. So whichever the most recent low to high move or high to low move is, that's going to be your recent leg of price action, which is phase number 1 to narrative building on the weekly. So you can see I've selected this candle to this candle because this was our most recent leg of price action, okay? Now, generally, when we create a leg of price action, we are either going to continue that leg of price action, which gives us the high of that leg of price action as our range high, or we are going to pull back somewhere into here and then continue, which allows us to mark this as our range low, because providing we stay above this low, for example, following a bullish week like this, we should remain bullish. If the market then takes out the low, that creates the narrative for next week, because that's then a break of structure, okay? So we create an if this, then that scenario. By taking a look at just this confined bit of weekly price action, we know that this is currently in what we would say is an uptrend. Generally, we would be looking to buy through a market that looks this bullish. Now, you'll notice we're not looking too far back with the narrative building. We're not worried about the massive trends, and that's because on the weekly, this market will take months or years to continue this higher time frame trend. So all we care about from a weekly perspective is the confined range. And it begins with, as we've said, marking the swing low to swing high of the current leg of price action. That creates our high to low range. We expect all price action this week is going to take place within there, be it a pullback and buy, be it a direct buy, or be it a break of structure to then lead us into a new week's trading, okay? Essentially, we don't care what happens outside of this range until something has happened inside of the range, because that's where our trades will be formed. The next thing we want to do on the weekly time frame is look to the left. What we're doing when we're looking to the left is looking for potential areas above and below that the market may be attracted to. This will help us to essentially build out narratives for if the market breaks higher. Given that we're in the middle of a weekly range here, I wouldn't expect this week's price action to really trade too much higher or lower. We don't expect a massive explosive move, but what we can do is simply mark the target on the upside or downside so that we can understand if the market breaks this range early in the week. Where are we going to be targeting? Okay, we just want to have all bases covered. We don't have any open supply zones up here in this bit of price action. The next upside target, if we end up impulsing straight into the week, if we then have to kind of readjust the range for the narrative, it's going to be that. That's what I'd look for if we saw a break above. So then we have our swing high, therefore we have our target prepped if the market makes an explosive move up. Now on the downside, I would simply look at this swing low as well, because we don't really have any demand zones again. So if we do break out of the range, if we do need to look for extended targets, we are simply going to look at the next swing low, or if we have an impulsive move up, we'd be looking at the next swing high, okay? So that kind of broadens the range a little bit. As I say, in this case, given where we are printing right in the middle of this weekly range, I wouldn't expect these levels to be met this week, to be honest, but it's good to have them ready because you never know if some data or headline news might push the market, very strong, very quickly in one direction. So from the weekly perspective, that is actually pretty much all that we do. We take a look at the most recent leg of price structure to build our intra-week trading range, and then we take that look to the left to build out those additional potential targets in case of a very strong move one way or the other. So now we've created the first piece of the story. We are either going to be trading lower this week or higher this week. Our targets are going to be the current swing high or anywhere down to this low. Now, our overall bias for this trade is, as we've discussed, given that we want to remain reasonably confined on the weekly, going to be bullish. We have this low to this high, this low, and now we're pushing up. So we are ideally interested in taking this market higher. Now, the second part of the story will be determining where we could potentially do that from. So if we go down to the 1-day time frame, we can take a look at the existing price action inside of pretty much our confined range and see here whether there is any potential for us to actually buy, first of all, given that that's our core focus this week. Well, I would look at this area for that to potentially go down. And then the second thing we could look at is if there is any opportunity to then sell down to that point. Now, one thing worth noting here as well that I can see on this time frame is we've got these equal lows, 1, 2 equal lows there. So it would also be worth, when we step down to the 4-hour, taking a look to see if there's any demand zones in here. Now, when we have equal lows or equal high liquidity in a market, what we generally expect to see is that to be swept out as a kind of stop loss hunt, because this marks a level that is seen as a support by the majority of retail traders. We know there's going to be lots of stops down here that can act as a magnet for price action. So we have another thing there to consider. Generally, as we've discussed, we want to see this market coming down, and then when it gets down lower, we want to buy it. But now we've identified by going to the daily, there's some equal lows. We could even see the market coming through this low and then look for the buy, okay? So what we could prep out for this week of trading is simply equal lows here. Definitely worth monitoring for a potential trade under that. But regardless, we're going to be looking for a trade down to these lows, okay? So although our weekly bias is going to be following this current trend and looking for this market to trade higher, we have potential here to maybe trade lower. So see what we're doing. We're creating an if this, then that scenario. If we expect the market to go higher, then we want to see a demand zone met. If we think a demand zone is going to be met, then we can look for potential to trade short, right? Now, I've also just marked on there the daily that we've got around this level here, a little break beneath one of the previous daily highs. So these wicks indicate on lower time frames basically uptrending structure. Then we have this large bearish break, which has pushed us through that, which potentially opens the doors for us to sell down to this area of demand and maybe even through to the equal lows. So that is phase 2 of bias creation, the daily. What we're doing here is kind of formulating a little bit more of a refined view. The weekly helped us to determine the overall trading range and potential market direction. And now on the daily, we're seeing where this market could really lead into before buys take place. And given that this market is breaking bearish, that there's potential for us to trade down through the open range before any buys take place, right? So we create multiple scenarios from the top down. At this point, I'm happy to go to the 4 hour because there's not much more information that this market could give us from where it is. If we then zoom out and take a look at this, we can see clearly these 1, 2 equal lows. And now, in and around this area we just marked, we can see there is a demand zone as well. So what we can do is get our rectangle tool and mark out this area of demand, which is going to be from here across. I use the last candle before the impulse. So in this instance, we're using this last gray candle before the upward move. That would be a demand zone we could look at. Now I'm going to remove the box just to neaten things up. We're going to take a look at this demand. We could refine that into here. I can see as well though, beneath this, we have some equal lows. So I wouldn't really want to focus too much on that demand. And every other demand beneath that, by the looks of it, is actually efficient, meaning it's been retested by price. So now we've kind of shifted things a little bit using that concept of liquidity and market imbalances. And by the way, for reference, if you're new to my videos, an imbalance is an open price range like this. An imbalance is also an open price range like this one just here. Basically, a demand zone that hasn't been retested yet is therefore an imbalanced demand zone, okay? So this one here would be, because this open price move has not yet been retested until the market fills it. However, as we've just discussed, the equal low liquidity is going to throw that one off because, as we said just before, liquidity acts as a magnet for price. So we don't want to buy above that if we're expecting that there's quite a high likelihood of the market coming through that low. So from the weekly down now, we created our trading range, high to low. We created our overall bias, which is bullish. We understand we want the market to get lower into an area of interest before we buy. And now we've identified a potential area that the market is highly likely to be magnetized towards due to liquidity, imbalance, and supply and demand. So at this point, we can start formulating setups, which is where we say the 4 hour comes in. We've had up here, now you can see it more clearly, a break in structure. So we can see on this 4 hour movement up, there is uptrending price action, and then we had this big breakdown. This breakout has taken us past the first low, which is already marked, this second low, and also this third low with a closure. So although we're bullish on the weekly and we're bullish on the daily, we see this kind of more refined 4 hour time frame is actually being bearish. So what we could do is start to look for possibilities to sell this market. And now we've done the daily, the weekly, and the 4 hour, we're gonna shift forward to the next day of trading, the next day of price action, which is gonna be the Monday. The reason we want to do this is because our price action for the week would then be over and we'd be kicking into a new week. So now we're on Monday. We've had our first movements of price action. We want to sell this market because all of that bias work that we've done on the weekend tells us that, okay, we do want to buy overall, but we've got a bearish shift in this market. We have a very large open imbalanced range, which is going to be this area here. We have some liquidity, equal lows here, which are going to act as a magnet for price. And we have liquidity here, which tells us that this demand is not really a good one to be buying from. So that would be done on Saturday or Sunday. That's where the bias is created, okay? The narrative is built there. Now we just refine the narrative further to find tradable opportunities. So for short trades, we could look at areas of supply above. I would be cautious, personally, of the imbalance that would lead us into this supply. So for me, I likely am not going to be, in real-time markets, taking a sell from this area of supply. I just don't like this breakdown enough. I'd prefer to see a pullback up. So this is where we essentially continue the story writing, right? What we're doing here is just looking for now, based on this current time frame, what kind of story can we write here? Where is the market likely to go? And if we consider it, again, on the if this then that kind of format, we've got this low. If the market breaks this low, then we are likely to continue trading lower. Therefore, we could look for a sell more directly inside of the price action. And then if the market pushes above this bit of price action, well, then that's likely going to take us through to this supply where we could then take a sell from there. So that is, again, continued narrative creation, but this time more refined into actual setup formation, because at this point, one of these breaks is essentially going to trigger us into being able to get into a trade. So let's run this a little bit and see what happens. Well, in this instance now, we've seen the market trading lower. We saw a break beneath the low. Therefore, we know we can look for more immediate selling opportunities because the momentum that we're seeing on the downside here is very strong. So what I'm going to do now is look for an area of supply. The most recent one that's created this impulse down is going to be this supply zone here. We could say then we want to sell this supply zone and continue trading that down towards the targets that we've got, which is going to be this equal low liquidity. Okay. Again, we don't want to really worry about this demand at all because it's got equal lows beneath it. It's very unlikely to react. It's more likely to be taken out. So our solidified target is now this level, and our solidified potential selling zone is now this area of supply. So we created another if this then that scenario. What we would want to see now would be a pullback into here, a reaction, some confirmation, and then we could sell into that. Okay. Now this again makes trading very safe. And this is why the performance is so high, because if we don't see that, if we do not get this shift of structure and we do not start to see the market breaking down in here, then we simply don't take a trade. Which means if the market was then to not do that and instead drive higher, we wouldn't have been taken out on a short, okay? Because what we've done is built this big picture narrative and understood where market reactions are likely to take place. And now we just wait for the market to tell us to actually buy or sell. So let's run this forward a little bit more. Obviously, another thing you could do here, we'll go down to the hourly now, is actually look for potential to trade back into supply. So we've seen here on the hourly, we have a low, lower high, lower low. Now we've broken up to a higher high. So you could actually look for areas like where we are now for a buy. Okay, you could look in these areas for buying moves because we still want this supply zone to be hit. So dropping to the hourly, we can refine the supply zone down. We got pretty much this little area we'd like to see reactions from, and we would like to see that lead into a confirmation. Now, I'm not going to do it because I don't want to add too much complexity, but if you are day trading the 15-minute and 5-minute, it's movements like this tiny little push up, returning to the supply that we want to sell from, that can provide you trades on the 5 and 15-minute time frame. So you could actually lock in a good profit through just this upward move here. This is the beauty of narrative creation, because building a narrative and working out where you want to buy from, where you want to sell from, all of these different things and where you want to target, this is going to create multiple smaller trades inside of the bigger trades, right? You see how we began by just looking at 2 weekly candles essentially. Now we've broken this down into a possible buy, which again, I won't go too refined into, but that's how we would look to run that. And then a possible sell if we start to see shifts down. And then we get down into here and we have a possible buy. So we've got 3 trade setups already prepped out of just 2 weekly candles, essentially, one narrative creation phase on those higher time frames. So let's take a look at this market then. We, staying isolated to higher time frames, are going to be looking for the sell trade, but there's where that potential for a buy trade would have come in. Okay. Now, what we would want to see realistically, again, creating the next phase of narrative, would be a break under this higher low. I see this has created some equal lows, but I'm not too worried about that given the high time frame narrative. The fact that essentially if we see a breakdown, we would then be getting what we want to see to start selling into that, okay? We are overall bearish. We've seen the supply zone hit. Now we are just looking for this structure to break in our favor. Another thing we can look for, given that we do have a little demand zone just here, would be a demand fail. So for me in this trade specifically, this would be the more confident approach. Essentially what I mean by that is we have a demand zone, which is this gray candle, the last candle before this bullish impulsive move. And we can see that we do have that equal high liquidity sitting on top of it. So just to remove risk of the market doing this, reacting from there and going higher, we would wait for the low to break to then sell it. Okay, that would be what we'd want to see. Now, if we then recap what we've got so far, we are just essentially looking to take this market down through these equal lows, through this white line, which again is equal lows, and into this demand zone. So we are looking now for a trade from here to here. We had a trade from here to here. So that's trade number 1 built from the narrative. And you can see it's very, very simple. High time frame points of interest, and then medium time frame points of interest. And all of the trading that takes place is just running it from this zone to this zone, from this POI to this POI. Okay, very simple stuff. So now let's just wait and see what the market gets up to in terms of preparing this trade for us. Again, reactive, right? We are reacting, not predicting. Yes, we've built a bit of a prediction through forecasts, but now we are just reacting to this. We're saying, if the market breaks this low, then I will sell. If this, then that. Reactive procedure. We could also say, well, if the market pushes over this high, that's going to actually open doors to us potentially going higher, because it would show this supply zone is not holding out. So then we could say, maybe we run to the next supply. And again, build the next scenario from there. So we've got two if this, then that scenarios at this point. If the market breaks this low, we are going to sell. If the market breaks above this high, then we are going to buy, okay? See, it's reactive. We're not marrying a bias. We're not forcing a bias. We're letting the market tell us what to do. So let's run this a little bit more, see which movement goes down. We've had a break and close under this zone, which is good. Okay, now we've had a supply zone form as well as a drive all the way down into the lows. So what we can do at this point is look at this last candle before the push down, which is going to be for me this gray candle here. We still have some imbalance into it, right? It's not been retested just yet. And there is no imbalance supply zone above here either. So what we could do is sell this supply zone, and we could put our stop loss above that high, which is going to be the blue candle, and then our trade target down into this low. So here's the setup creation taking place. As you can see, we said if this breaks, we will sell, okay, given the demand zone low just there. We've now seen the break, so now the market has given us a setup. We haven't had to look for this. It's giving the setup to us. So we could place this order, 1% risk, and we can just let that run. See what goes down from there. The market taps us in. We should be getting a trade down towards the area of demand. And as you can see, that is what it just did. And that's a 4.14% trade, which on this $200,000 simulated account is $8,000 in profits. But you can see up to this point, this trade was formulated for us based on the if this, then that format, right? Let me just run it back to the weekly to show you this process top down. We had the weekly creating a bullish push. We created our range high and our range low. That was our bias. We said we are overall bullish, but we may want to see this market come down first before we buy. So that in itself creates opportunity to trade through the down move, which is exactly what we've just done. We then went to the daily, and on the daily we identified some equal lows. We saw maybe there's potential for the market to actually come down here before going higher. We would then ideally want to see basically the market come down here, trade into this point, and then we could look for a buy higher, which at the point of trading we were around here, which gives us this whole range to trade through. Now that we've done this, we would lead into, I believe it is now Friday's price action, the following week's narrative, which in a moment we will do, but let's just finalize this. We then went to the 4 hour, understanding the market was bearish. We created our first setup, if this, then that formation by looking at these two levels while the market was trading here. We said if we break up, we are then going to buy to this supply and then sell. And if we break down, we are then going to look for opportunities to directly sell, taking it towards this target, okay? Then our actual setup came from, first of all, 4 hour supply zone being created. There was one potential trade on the way up to that. Then we hit that, and then we look for confirmation, which provided this trade to us on the way down. And again, this was created as an if this, then that scenario, which in this instance was, if this high breaks, just here, we are going to be looking for a continuation buy towards the next supply zone, then we can look at selling from there. If this demand zone breaks, we are then going to be looking to sell directly because we have nothing holding price up, and that fits very nicely with the big picture narrative we've built. And then all we did was wait for the break one way or the other and then set the obvious trade, sell from the only supply zone with a stop loss over the high. That was it. And as you can see, the market just handed us this trade. Now, as you can see, that trade took us through to the Friday. So that week there was realistically about 2 trades formed by the narrative, the small buy and the big sell. Now, it's going to be Friday again, meaning essentially this is weekend price action. So what we want to do is kind of rerun the narrative. And the good thing about narratives is if you trade the same pairs, which I suggest doing, You essentially keep an endless flow of last week's narrative into this week's narrative, into next week's narrative, and so on. I'm going to clean the chart off, and we're going to run this from the weekly pretty much as we would. But what we can do here is kind of consider the previous week's narrative as well. We understood from that there was some equal low liquidity through this level. We also then understood we'd be happy to buy here, providing we don't really close beneath that level. As you can see, this weekly candle closed as a wick, which shows us that we saw rejections coming in down at this level. Now, we are going to follow the same flow. We want to mark our high and our low of the previous leg of price action. Now, the previous leg of price action in this instance, or the current leg of price action, is no longer this move, because that we've already traded through. It's going to be this move, right? So any trading that takes place this week will generally take place between these two levels, whether it's a buy, which is, of course, what we expect given the previous narrative we have, or whether it's a sell, okay? Now, the sell is likely to extend further, given that we are not trading in the mid-range anymore. We're trading close to the low of the range. So if this market did go bearish, it would likely take out this low and then continue lower in the same week. So what we can do in terms of building this narrative out is do the look to the left rule, okay? And we can mark out this low as a potential downside target. So if this then that scenario that we've essentially already created from this weekly perspective, the very simplified view will be if the market closes under this low, then we will look to trade the market lower towards this low. The other side of that is if the market stays trading above this high, then we will look to take the market up to there. Okay, so you can see the weekly is very simple. We just create these simplistic, straightforward ranges. Now the daily, we go down and we see not too much new information, but what we can start to do here is build points of interest. Now this is initially where we found the equal lows. So we know there is a demand zone around here. We're going to go see that again on the 4 hour, but for now we already understand that is there. So that would be kind of POI number one. The next points of interest are going to be upside. We've seen a wick pushing the market back up. We've seen this demand zone reacting. So here we kind of have a good understanding that the market is likely to trade higher in line with that initial narrative and the initial bias that we had. So our ideas for this week are going to be to realistically trade this market higher. But because we're looking at the weekly, daily timeframes, we know that trade will probably take a while. So most people don't like to hold trades for too long. That's fine. What we would want to do then is identify potential target areas to push the market towards before, well, on the way through to that larger move. Essentially meaning we could take smaller targets for trades intraday throughout this week. So a trade that we could see would maybe trading towards, first of all, this supply zone. Given that we have a bullish bias, I'd be more interested in actually pushing towards swing highs. So targets like there and there, these are good targets, okay? Because obviously if we are bullish on this market, we're not worried too much about it reacting from supply. We'd more so be looking for the chance to take it into new highs. That would then confirm the next move where we could look for this opportunity to take it to the next high. And then that would confirm the final move, which would then provide an opportunity to take it through to the next high, okay? So that is how we would build this out on the daily in terms of targets and points of interest. So now let's go to the 4 hour, which is essentially the final bias creation time frame. Here we see there is no real significant imbalanced supply zones. The only point that we could potentially see reversals would be this candle. Even that actually has been retested by the looks of it. So it kind of fits in with the idea that we have that this market is likely to go higher because there's no real significant point for the market to reverse in here. What we can do is maybe refine another target. So this swing high being one of our targets, well, there's a supply zone above that. If the market gets to the swing high here, this white line, then it's most likely going to fill the final piece of imbalance and hit that supply as well. So trade target number one, built out from this narrative, could be from where we are up to there. That would be a potential trade opportunity. And given that that's the most near-term opportunity, that is what we can look at for our setups, okay? So now we've got, in the current leg of price action, very similar to what we did on the weekly, we've got a kind of trading range created. And this trading range is going to give us two ideas. If this market sinks down and breaks under this low, that goes bearish. If it doesn't do that, given the other bias that we have regarding the demand zone, other confluences, it's likely to trade up towards this high. And if this market breaks above this high, then we are likely to keep on buying higher into the range. So now let's go to the hourly and see what we can do in terms of setup formation. So as of right now, nothing much. We would realistically want to see some bullish price action coming in. That would commence after breaking above this supply zone. This is pretty much the only point that would cap price now. So we've created again a more confined trading range. This is for executions. We're basically saying if the market comes up over this high, then we can look for buys, right? Again, very similar to what we've done on every other time frame, creating if this then that scenarios. So ripping this forward a little bit, we see we've pushed up, we've now broken above this high, and this is where setup one could actually formulate. Now that we've seen this push and break, we can pretty much follow through with that if this then that format we just discussed of break, pull back, buy. And we know our upside target due to the 4-hour daily narratives that we've built. It's going to be here. It's going to be the supply zone as well. We could refine this supply in now that we're on the hourly to about there. So we essentially are looking for a buy to get towards these two next points. Okay, the swing high, it's a little bit of a weaker target in terms of it's a strong target for us, but I think that it's likely to go because obviously our narrative and our bias is bullish. I would expect the market not really to stop here. So if we were taking a buy, I think this is the clear trade. This is the clear target because it's a next imbalanced supply zone in this entire move. It's basically the only next point that can magnetize price on the upside. So our execution then, very simple. We've had now a break of structure. We're going to look at demand. There's a demand zone. We can buy from there. We could put our stop under the swing low. And then our target we've just defined, right? So you can see this narrative again. What day are we on now? This is Monday. Is crossing over into a new day of trading. So we'll place this order. Now this kind of move for a day trade potentially, 5-minute, 15-minute work, could be somewhere you'd look for a sell down, right? Again, this is what I'm saying about continuing the narratives onto lower time frames. You can scale down as far as you want. Obviously, the further you go, the more complex things will become. But you can do it if you are going to be a day trader most of the time. So here we've had a tap in. We're looking for a rally. And there we go. As we said, this is the next clear point for the market to target. So that's that trade done as well. So there you go. That's followed us through into the next week. From here, taking out the top of the supply, which is a very good sign to see just there. So what we would look for would be a pull back and then a trade from this area of demand. That would then take us higher towards the next point of supply. That would be the next trade we look for. Now, what we can also do here is look for a confirming shift. So if the market was to do this and then come down and break structure here, then we can sell down into there. So showing you the follow-on of this narrative, we are essentially at this point going to be switching up the price action leg that we look at. We're going to look at here, the low through to the high, okay? And then we can also consider this kind of internal point as what could become structure. So now if this then that trades are going to be, well, if this happens and we see a strong shift in price action, then we can sell down. And we know that our demand zone is going to be where we want to buy from, given that we're in an uptrend. So then if this happens, then we can buy from there, right? So if this, then that. That's pretty much all we're doing. Now, alternatively, of course, that might not go down, of which case, if we broke above, we could just look for more immediate buying opportunities inside of that range to finalize these targets, which are going to be the next swing high, and then little area of supply up here potentially as well. But realistically, given the weekly narrative we built, we've got high conviction the market's going to take out that entire high, okay? So let's see what it does. Okay, we've had the sweep. If we get a break, which at this point would be under this low, okay, because we've actually created that structural shift type move now, like this. If we get that, then we can sell. If we end up pushing higher, then we can just look for buys inside of that range. Okay, so that's going to be a push higher. So realistically, your next trade could be coming from this demand, stops under the swing low, targets up into the high. If you wanted a more conservative stop, you could put it under there. That would be a fine trade. So that would be a trade you could take as well from essentially this area of demand that we're in now. Obviously then we would move into a new kind of if this then that. If we broke through this low, that would be a losing trade, but that would also then open doors to selling. So if we lose there, we have possibility to sell down to there. And then if we sell down to there, we have possibility to buy up from there, right? So you could place this trade following that new confirmed flow that we are in an uptrend. This is a higher low. That would be a fine trade to place. And then if this trade lost, you just open doors to the other way, the other possibility, right? Otherwise though, this should run towards our higher time frame targets of swing highs and supply. So there you go. There's a couple more trades built in there, and you can see how these have fit into our narrative perfectly. This one has taken us through to pretty much the end of day Friday. The target was hit by the looks of it on the following Monday, but regardless, it was a trade executed and taken throughout the end of this week. This one was taken through the start of the week. So again, just to run it down one more time to show you how this narrative comes together. Number one, we begin on the weekly. And what we do here is determine where is the market likely to go inside of a confined intra-week range. Again, a good focus point here of what I've been explaining. The reason I say we only have to look at confined ranges on the weekly is because you can clearly see our first confined range was between this high and this low. And all the price action this week took place between that high and that low. Our following range was between this high and this low. And all of our price action has taken place between those highs and lows. So we only need a smaller confined range on the weekly because day to day, the weekly candles are going to be covering large daily moves, okay? They're very, very big ranges. So when we do scale down to those trading timeframes of 4 hour, 1 hour, 30 minute and below, we get many trades out of an individual weekly candle. But you saw the weekly, we identified the range. Daily, we identified some additional points of interest and liquidity. 4 hour and so on was where we crafted these points of interest, looked for reversals, created those first if this then that scenarios, and then hourly and below is where we actually formulate these positions to trade to and from. And every time we get to a stall in price action, a trading range, a bit of consolidation, sideways market price action, this is where we build out that if this then that. If this breaks beneath, we start to sell. If this breaks above, we look for buys, and so on and so on and so on. And it all fits in that high time frame narrative. So that's how you build narratives and create multiple win-win scenarios, taking your trading from predictive to reactive and taking your results from poor to brilliant. Now, if you want help putting this into action, I have a channel called Insights. This is basically where you get an inside look into my mind as a trader of almost 9 years of experience now, and you can pretty much just follow the movements that I make in the market. In here, we have weekly narrative building videos. So every week you'll have narratives for a select watch list sent over to you. So then you can just operate inside of those narratives in the way that I've explained in this video. You'll get my day-to-day trade ideas and analysis. It's not a signals channel. It's not copy-paste money. That stuff's pointless because you become dependent on me. If I ever go anywhere, you're going to stop making money. What this is the setups, the ideas, the target areas, the entry areas, and the reasons behind it all, so that you can operate with all of that information, build experience, become a great trader over time, while also having that endless flow of opportunities to work with. As you've seen in the narrative video, the way that I trade is dynamic. I cover swing trades and day trades. And I also will be covering my position trades, which are trades like this one. I took one on silver, which did just around 100% as of now. That's a very long-term trade. But this one on Ethereum was around 3 months long and returned 186% in profit in just 12 weeks. So it's a complete insight into my mind, not just my day-to-day trades, but everything I'm doing in the markets. And there will also be lessons in there extracted from the trades I've taken. If there's something I think you can learn from inside of a trade that's been sent out, I make a lesson to break that down. Now, last time I ran a channel with this much depth into my trades, my activities in the markets, I got this from someone who made $44,000 off of one of the trade ideas I sent and then extrapolating those ideas and trading concepts into a couple other assets as well. So this stuff really works. Now, obviously, I'm not promising you that you're going to make $44,000, but you can see the possibilities when you put this into action, right? So if you want to join, hit the link at the top of the description and you'll jump straight in, ready to get all of my thoughts and ideas that I see in the market so that you can take advantage of those opportunities and learn along the way. Thank you for watching. I'll see you in the next video.